Hello, my name is Alwin Ng and welcome to Market Apprentice. Today we'll be talking about horizontal support and resistance. Today is the first of many sessions which is specifically on support and resistance. Horizontal support and resistance is one of the most important of all support resistance. I use it on a day-to-day basis and hopefully you too will benefit from it. Just a reminder, before you start the session, hopefully you have read the document on Support and Resistance 101. This can be found on your modules. Please remember to read them before you start. On assumption that you've already finished reading it, let's begin. So what is a horizontal support and resistance price level? Let's break this down. A support level is a price level where an asset class has had difficulties falling below, i.e., for a currency, for example, price finds it really difficult to drop lower. On the other hand, a resistance level is a price level which an asset class has had difficulties pushing above. In other words, price struggles to move higher. Think of it conceptually. A support resistance or a horizontal support resistance is actually a technical or psychological price level where price meets a barrier or an obstacle. Which makes sense because price struggles to go above or below it. Don't you think so? In front of you is an example of a support level. A support level acts like a floor. In this example, as you can see, as price begins to go lower, it struggles to go below it, but it bounces up. Again, it tries to go and test that level, struggles to go down, and bounces to go up. Here, in a similar fashion, it does what we call a double bottom. Again, price struggles to go down. As a definition, for a horizontal support level to be valid, it requires 2 or more touches on that same price level. Once there are 2 or more touches, that level becomes valid and it could be applied over again and again. Just to be clear, the more touches, the stronger the support will become. The next one is a figure of a resistance level. A horizontal resistance level acts like a ceiling. In this case, price tried to go up, but failed to go up. Here, it tried to go up again, but failed and came down. It went up, but failed, so it had no choice but to come down again. Similar to support, for a horizontal resistance level to be valid, 2 or more touches is required. Once there are 2 touches, the horizontal is assumed to be valid. Again, the more touches, the stronger it becomes. Now that you understand what a horizontal and support resistance mean, we're going to break it down a little bit more. Because a horizontal support and resistance can be broken down to a major support level and a minor support level. Also, a major resistance level versus a minor resistance level. So what do I mean by major or minor levels? Major, a hard level, is a strong horizontal support and resistance, whereas a minor is a weaker horizontal support resistance. A major level is rarely broken. In fact, as I mentioned before, the longer it is unbroken, the stronger it is. On the other hand, a minor support level is respected frequently, even though it has been broken in the past. So just because a level has been broken doesn't mean it's not a level anymore. It just means it's become weaker. In a major level, you expect more bounces than breaks, whereas on a minor level, you probably expect an equal amount of bounces and breaks. Just bear with me as I'll go through what I mean by breaks and bounces in a bit. Next, you usually find major levels on a larger time frame. So the larger the time frame, the stronger the level is. Whereas on a soft level, the smaller the time frame, the softer the level it is. A major level is easy to spot. Usually, you find it within 2 seconds. A minor level is a bit more challenging. It takes a bit longer than a major support level. Now, major support levels are usually near market extremes. On the other hand, minor support levels can be found anywhere. This is my analogy of a major horizontal level. It is a very thick wire, between 2 to 3 centimeters maybe. Whereas a minor or soft horizontal level, you're talking about half to 1 centimeter maybe. So just to give you an idea, a major horizontal is so much stronger than a minor one. So, why is a horizontal support level important, you may ask? In terms of the types of support and resistance, a horizontal is probably one of the easiest barrier to find. If you think about it, it consists of one price only, whereas other support and resistance types will require a variation of prices. Now, because you only need one price, it is the least subjective of all types of support and resistance. It acts like a magnet. Like other support and resistance, price travels towards it, consolidates around it, or travels away from it. For example, if you have a horizontal level here, when price goes near the level, it moves away, that's what we call a bounce. In case I forget, a break is when price moves near it and then goes beyond it. That's what I mean by a break. Horizontal support and resistance is also important because this is where price usually turns around. We are constantly looking for where the price bounces. We as trend traders like to trade the bounce because it is the safest, the lowest risk, and the most profitable way to trade. Just to give you an idea, when there is a strong trend or strong trending market, price would usually break through a level, bounce off it, and then retest it again. So for example, price broke through the level, bounced around it, it broke the level again, came down to retest, and bounce again. Broke the level, came down, retest again, and so on and so forth. Soft levels becomes constant support and resistance. On less trending days, price bounces aimlessly between those soft levels. As you can see, price is just going between this line here, here, came down, tested, went down, retest. It's just going in random motion, but constantly bouncing off multiple soft levels. Now, this is an example of the hard level that we've spoken about. As you can see, there are 2 touches here. Another 2 more touch. With so many touches, that level becomes harder and harder and stronger. However, if you were to look carefully, there's actually another hard level on the top. 1 touch here, 2, 3, and 4. when you have a strong resistance on the top and a strong support at the bottom, what we have is a ranging market, ranging between those two prices. However, if we were to look in more detail again, there's actually a soft level there. As you can see, price tested it here, broke it here, bounced it here, broke again, bounced here, bounced here, bounced here, broke, consolidated around it, and so on and so forth. Now, using the analogy that I had just now, the hard level is a strong and big fat metal cable, whereas the soft level are just tiny little cables hanging around, so the price can bounce off them very often. Right, that's it for today. Now, as soon as you finish this video, here are some tasks for you. First of all, I want you to pick two currency pairs and identify major horizontal support and resistance levels for each of them. Once you're done, using the same currency pairs, identify 3 minor horizontal support resistance levels, which means there should be a total of 6 support and resistance levels. When you're done, discuss how the majors are different from the minors. That's it for today. Thank you very much, and I hope you enjoyed the session. Don't know if you realize, but you're now one step closer to becoming a professional trader, because once you understand horizontal levels, you are making a leap forward in your trading. Thank you, and bye.